Hey, what's going on, guys? Happy Sunday. It's May 22nd, 2:24 p.m. I wanted to push out a SPY update and also a NASDAQ update. So real quick, we're just going to look at the macro on NASDAQ first. So this is IXIC, which is the NASDAQ Composite Index, and this is my macro count. So here I have Super Cycle 1, Super Cycle 2, and then cycle 1, cycle 2, primary 1, 2, 3, 4, 5, cycle 3, cycle 4, and then we finished cycle 5. And we're now in super cycle 4. The alternative count is that super cycle 2 ends here. And if that's the case, that means whatever correction right now is going to take just as long, or roughly around the same. And what that would do, it would suck, but it would put us, Jesus, into 2030. I don't think that's the case, but it's just something to keep in mind. So if we dig in here, if we look at it from a non-LOE perspective, you can see there was bearish divergence building up on the monthly since 2018. And that's usually indicative of a third and fifth wave. And then also this monthly RSI support broke down. It's never a good sign. This 244 monthly moving average is at 5.7. By the time it's probably going to tap it and probably bottom around here is my best guess. So something like this, and then something like this, then go up. That's my best case on the macro. I'm not sure on the time frame, but if we assume that this was super cycle 2, then we can assume that super cycle 4 should take roughly around the same amount of time. So put us around September 2024. So about two more years, 2.5 more years. That would be generational wealth buying opportunities, but we'll just have to see how everything unfolds. All right, so if we go down to the lower time frame, we'll jump into, we'll just jump into this one. So this is the NASDAQ futures, and basically this is how I have it counted. So 1, 2, 3, 4, 5. Then you draw your channel. We broke the channel, and we back tested the channel, and then we are under all these major moving averages. And then what gave me confirmation, ultimate confirmation for me, was 12K. And we closed 2 weeks. I think it was 2 weeks. 2 weeks. Okay, we closed the first week at this level, so that's confirmation for me that at least the tech index, the NASDAQ, is starting a major cycle correction. So let's break it down. So I either have it 1, 2, 3, 4, 5. This is either 1 or A, B, C up, and we back tested, rejected. And now we're in either a 3 or a wave C. Now the problem is that where are we in intermediate wave 3? So for this specific count, it's hard to subdivide. It looks like I have it as 1, 2, 3, 4, and maybe it finished 5, maybe. We're gonna have to wait till next week. And then I also like, if you notice, I like doing this time thing. So the first impulse down was 64 bars. Wave 3 usually is around the same time, but more violent in terms of the trajectory. So when we jump over here, this is basically the same thing, but this is where I'm looking for some kind of diagonal. So on NASDAQ, the diagonal 1, 2, 3, 4, and then it's gonna be 1, 2, working on 3. I have 4 and 5 left of the diagonal. So for me, it's a contracting diagonal. It can be, so an ending diagonal can be truncated. So I'm looking somewhere around 11.2, which would be a good stopping point. and then we'll reassess from there. But yeah, those are my two scenarios. Either wave 3 is already in, or we're finishing up wave 3 in this kind of diagonal formation. It's just gonna be a whipsaw and chop many traders out. So that's the Nasdaq. Well, I guess I'll cover what happens after the move is done for wave 3. So after wave 3 is done, we can expect wave 4. Copy over here. We can expect wave 4 to be around the same time as wave 2. So after this is in, just say for like a mock purpose, wave 4, since this was an expanded flat, this should be either a simple zigzag, like a simple ABC, or it can be a triangle, or it can be complex. But given the time, I think it's going to be a triangle or a simple zigzag. That's just me. Well, we'll know when we get there, but this is something I would look like, something like that, and then this moving average would come in and reject it. Another way to look at it is, I think I have the channel. No, I don't. Is you draw your channel here. We breach this, and then I guess wave 4 can chill here, and then either back test the bottom of this or the midline of the channel, and then capitulate. And then once you capitulate, it'll probably go for 10K, sorry, 10.6K, and a lot lower. So yeah, TLDR, I think the bottom will be in probably a couple years, probably at it'll be between these two support levels around 8K and 6600. The one thing that we do not absolutely want to see is if this channel breaks or if this red line is touched, which is 4700. If it's touched, then we're fucked. This is plain and simple. All right, so that's Nasdaq. Let's go to SPX or SPY. I don't know if I have a Genesis count on it. Do I? Is there an overlay? Let me see if I can find it. No. Oh, and then also one thing to mention is that nothing I say is financial advice. This is just my opinion on the markets. So this is all for educational purposes only. Where is my thing? Alright, I thought I need to organize my charts better, but I thought I had a macro in place. Okay, here we go. No, that's not it. And my laundry's done. Alright, here's a macro. Perfect. So yeah, it's the same ordeal with the Nasdaq or IXIC. I think that the problem is this super cycle won't end here, or does it end right here? Right, so we don't know until it happens. So I have a super cycle 1, 2, then cycle 1, cycle 2, 3, 4, then we finished a major impulse up here, and now we're starting super cycle 4. For me, I think usually wave 4s were traced to the previous degree wave 4s. So what I mean by that is this is the cycle wave 4, so super cycle wave 4 should retrace somewhere around these levels. So what I'm looking for is to bottom somewhere in this area, 3K and 2200. Confirmation that we're in a major cycle correction is the red line, so 3500. And if we look at, I know it's all messy right here, but I didn't have time to do the overlay. I guess this is the macro count. Yeah, interesting. Oh my god, what is going on? Oh, I guess it's just a RSI study. Oh yeah, so so just to reiterate my full conviction, you cannot, there's no way that this is you cannot label this as a 1-2. I'm sorry. it's invalid. You cannot label this as 1, 2. That's not how it works. All right, so with that being said, if you look at the R side, there's multiple trendline breaks all the time. Yeah, as soon as it broke, and then now it's just retracing. So I don't know what the time frame would be like for cycle wave 4 or super cycle wave 4, but I do know that the levels to look at are 3K and 2266. For me, this looks like a drawn out flat, so this should be, I guess, it can either be a triangle or it can be, I don't think it's gonna be a flat. I think it's gonna be like a zigzag. We're just gonna have to wait and see, but my best guess is like a sideways triangle. So with that being said, we can break it down into, you can see the detailed count here. Yeah, and it subdivides nice, really nice. I'm a big fan of channeling and time durations now. So primary 1, primary 2, 3, 4, 5, and you can see 4. You can see 4 and 2 look good in comparison. So this would be running flat. This is like I think I had it as a triangle. A, B, C, D, something like that. Maybe expanded flat. And then this is the part where this part's kind of sus right here. That's sus to me, but it still subdivides nicely as a, not nicely, but it still subdivides as an impulse up. You can fit it in there. So 1, 2, 3, 4, 5. This is like some kind of diagonal, or maybe 1, 2, 3, 4. Yeah, you can fit it in there. And then this can be expanding diagonal 1, ABC up 2, A or B, and now we're working on 3, 4, and 5, or this is a C wave. So what I'm expecting now, I think we're just gonna go for this red line within a couple months. Let's see if I have a lower time frame. And then just going back, whenever you have a long-term channel breaking, it's a pretty good sign that a major correction is happening, as well as you're closing underneath all these moving averages, and then you have a head and shoulders, and then you get back tested on broken channel, and then let me guess, this is a 618 or 786 retrace. Yeah, it's obvious. Like, I don't know how anyone can be bullish in these kind of conditions right now. You can be the contrarian all you want, but when there's so many fundamental factors at play, you just take what's in front of you. Don't make it more complicated than it is. Is this my? Where's the? Interesting. I don't know where I put the. Where would I put my chart at? We'll just use this. Okay, so SPX, we're in wave 3 or C. Now I don't know, just like NASDAQ, I don't know if wave 3's in or if it's working on the last leg of wave 3. So here, excuse me. Recall my own notes. I will work with this. Blah blah blah. Delete. Alright, so this can be 1. This can be 4. Let's just make sure the length subdivides nice. So wave 1 is 225. Wave 3, yeah, okay, so as long as wave 3 is not the shortest, this count is valid. So the reason why I have this as wave 3 is it penetrates this channel, and it backtested for wave 4, and then it died, right? So now And why I think we're gonna get an extension is because this channel is the wave 1 and 2. So I mean, like that. Put intermediate. And this is one minor. So the labeling is correct. This is also minor. All right, so we're in 5 of something. We're in either 5 or C. So I think it's the same deal as NASDAQ, where it's forming a ending diagonal. Let's keep that in there. So I think you're gonna do, let me do this. 1, 2, 3, 4, and then maybe 1 is in. 1, 2, 3, 4. Looks like it's gonna be like that. It's gonna be minute. So this maybe it's not 1, ABC 1, ABC 2, ABC 3. Maybe deeper than ABC 4. Something like this. Yeah, and then this is the, yeah, so maybe we go for that. We're just gonna have to wait and see, but ultimately, I think we're in a last leg of our wave 3. Right now, the only thing is, the RR is not good for shorts. I don't recommend it. Again, not financial advice, but I'm not in any shorts right now, other than being leveraged in some inverse funds. So once we finish this leg up, so this, then it's gonna back test. It should be a good liquidity grab, and then maybe go for a retest of this channel. So around 4K, run here, and then we die. That's what I think is gonna happen. That's SPX. And then while we're here, we can talk about some of the inverse funds. So I'm positioned right now. I have some, and I took profits already on SQQQ. But if you just look at it, right, I mean, basically the chart is inverted of SPY and NASDAQ. If you just look at it, that looks like a breakout to me. That's a breakout. High time frame, that's a breakout. Lower time frame, still a breakout. Those EMAs crossed over, and now it's being used as support. So what I think is going to happen is it's just going to chop around here, consolidate while these EMAs catch up, and then it's just going to go boom, boom, boom. That's what I think is going to happen. So that's where I'm parking my money. And then if you want to even get technical with it, I mean, like that, then like this. So that's your A, and then you have your C wave, something like that. So it's good times, not good times, but it should be volatile times ahead. So that's the inverse fund, SQQQ, which is a short for QQQ. Do not recommend options on it just because it's already leveraged, so there's no point unless you're a true degenerate. And then let's talk about DXY. DXY, also one reason why I don't think it pays to be short right now is it looks very extended. I think it's gonna consolidate here for a little bit. Did I overlay? No, damn it. All right, so on a huge time frame, on 6 month, it's a clear breakout, right? Like this is very clear breakout, back test, and it's ripping. So whenever this is going uptrend, it's bad for stocks and cryptos. So lower time frame, I think it needs to chill for a bit. Looks like it wants to back test this broken resistance / channel. So once it chills like this, and then just go up. My ultimate target is 120 or 118, and then we will reassess from there. If we break above that, then it's gonna be bad. So that's DXY. You can look at the 10-year, and then there's just more cases of slowing down. So it got rejected as major pivot for now. It's probably going to consolidate, gather more liquidity, and then push through. In the 10-year, it's just a 10-year treasury note, so it's just waiting for these EMAs. VIX, let's talk about VIX. That looks bullish to me, so it's breaking through. If you go to monthly, higher lows. When it gets through 37, it's going to be very volatile, huge moves ahead. Daily, this 32 level is very hard resistance, but we'll get through it eventually. So what I think is going to happen, looks like, it's hard to do Elliott wave count on it, but I think it's going to do like this, and then something like that. Again, just what I think. It's not God's word, but just what I think is going to happen. So that's VIX. I went through SPY, NASDAQ, TXY, and VIX, and was that everything I wanted to talk about? I guess we can go through IWM. I count almost 5 waves almost in as well, and I just think everything's a little bit extended to the downside, so I might play it along on the dead cat bounce and then ultimately reshort, but we'll just wait and see. And I think I covered everything I wanted to cover, but those are the technical aspects. And then in the fundamental aspects, when you have inflation as high as it is, and you have the Fed with quantitative tightening and no longer supporting these stocks, and all these stocks are overvalued, at some point they're going to revert back to the mean. That's why I'm so confident that a recession / bear market is already happening. It takes 6 months for it to be actually realized and formally announced, but the truth of the matter is that it happened since January or the beginning of this year. So I guess June is when they'll announce it. So it's a recession. We're gonna get generational buying opportunities probably 2-3 years from now, but for now, cash is king. So just stack your bread. Inflation is a real issue. The cost of goods and oil is increasing rapidly, while GDP or production of everything is stalling / capped. That's why we're facing an issue that we've never faced before. So it's going to be a very different market and problem that we've never solved. And it's very premature to say, oh, up only, oh, buy the dip, because that's all investors / traders of our generation have only known. They've only known to be in a super uptrending market. They've never known, I guess, something that happened back then. They don't know what it's like. They've been spoiled so hard by the Fed. Then when they turn a money printer off, then that's when the real traders come out, and that's when survival of the fittest happens. So just remember, rising energy costs, quantitative tightening, tech companies having hiring freezes, and it's already beginning, hiring freezes across the board. Netflix, Google, and then Microsoft said they're going to match salaries, but at some point those jobs are not safe. And then you have that housing bubble. When your jobs aren't safe, your bonuses are going to be smaller. People are going to lose some of their jobs. They're not going to be able to make their mortgages, or God knows they have 2 or 3 mortgages because they're degenerate and made multiple loans. Then they're going to foreclose on some of those houses. And then the interest rates are going up, so it's going to be even harder to get a mortgage. And then your electricity bill is going up. I mean, there's just so many factors that I've already posted about on my own Twitter, and I think I've ranted about it through a couple of my videos already. Was there anything else that I wanted to cover? And then I guess the price of food, rice, just prices of everything going up while, like I said, production is capped. So from now until whenever, 2024, 2025, that's when you keep stacking your bread. Like, stack as much cash as possible to be safe. Cash is king in this environment. If you're an advanced trader, then this is great for you. It's good. These are good waters to grow your portfolio stack. But I'm pretty sure, when you see CEOs of companies publicly disclosing that they're selling millions to billions of their stock, then it's a pretty clear sign that even that they are being prepared for lower prices and tougher times ahead. Elon sold billions of his Tesla stock, and people were saying, "Oh, it's for Twitter," but in reality, he probably knows Tesla's overvalued as shit. Like, if you just look at it, is this the right count? Oh, let me look. I wish there was a short Tesla fund. I would fucking buy that. Him, Mark Zuckerberg, they all sold. And this is my count, by the way. They all sold millions to billions of their shares. I mean, they know it's coming. I guess this is my official count, but yeah, I think, and then I'm just gonna throw this in there. I think Tesla's gonna go at least 400, at least, and then it's gonna ultimately test this trend line. So maybe 128, probably break it, come down to like 45, 48 bucks, and then it'll just go back up. Like, Tesla's very overvalued in my opinion, and it's one of the biggest meme stocks. So my rant is over at hopefully 27 minutes. It's not too bad. But yeah, if you guys are interested in learning more, I do have a Discord, so just message me, and then the link to join is in my Twitter bio. So just join that, and then once you join, you gotta go to, it'll bring you to this page called the greetings page, and then you just do K-verify, and then you'll be granted the community role, and then from there you can go to the welcome page, and then you'll see the membership fee structure. In here I just give crypto plays, stock plays, and I go over all the TA stuff and how to learn it, like Elliott waves and then channeling, etc. So I hope you guys enjoyed the video, and just remember, stay safe out there. Cash is king. Peace.